Good afternoon, everyone. My name's Adam Brody. I'm the co-founder of Ignition Financial. Welcome to our 9th webinar. I can't believe it's 9 already. Today, we're talking about funding innovation with R&D tax credits and grants, in particular from Innovate UK. Now, back when we did our first webinar, which was in the first week of lockdown, we recognized that amongst SMEs and in particular amongst our clients who are technology, science-based, very, very innovative companies, but SMEs more broadly, there was going to be challenges with liquidity and cash flow. And while there were a number of new schemes which were being introduced at the time, so CBILS or Coronavirus Business Interruption Loan Scheme, to give it its full title, was announced rather hastily, as was the Job Retention Scheme, both of which are still operating now and have been excellent schemes. We were keen to highlight that there are a number of existing schemes and ways of helping you with your cash flow and funding, and amongst those, R&D tax credits and Innovate UK grants are right up at the very top. And it's been probably certainly R&D tax credits has been our busiest area of our firm over the last 3 months. And I'm delighted that we've managed to get Ben out from his basement in his house in Kent to talk about R&D tax credits today. We've also going to be joined by David Weir from Easily, and David's is going to talk to you about financing for R&D tax credits. So you don't necessarily have to wait to do the application. There is financing available to help you get the cash in quicker. And we've also got James Craven, and James is going to talk to you about some of the Innovate UK grants and other grants which are available. And many of you will know that the government has announced increases in the amounts of funding that is available for these competitions. So before we get started, there is a poll which we'd like you to fill in. Thank you very much. If you've applied for an R&D tax credit before, it'd just be useful to know for our panelists how many of you in the audience are familiar with the scheme and have applied for it. And also if you have considered or are considering, I should say, R&D loan financing or applying for a grant or not really. Thank you very much. Okay, and just a couple of housekeeping rules. So if you do have any questions, please do submit them in the Q&A box, which is you can see on the taskbar. Try not to put them in the chat box. It's just easier for us to administer. What we'll do, same format as we've done, is panel discussion, and we will go to questions, probably 15-20 minutes, just depending on the number of questions that are coming in. But please do submit them as and when you feel like it. And it would help me out, actually, if you could address it to either David, Ben, or James, if possible. Okay, so David, perhaps you could introduce yourself.
Let me just get organized here.
Hi, David.
Hi, how are you?
I'm good, thank you. So you were meant to be calling from the UK, but you're calling from somewhere a bit more exotic than Blighty.
Yeah, absolutely. So I'm actually in Australia at the moment, and that actually forms part of my story, really. So I started a company here in Australia about 3.5 years ago, financing R&D tax credits. I've been supported during that journey by a large US hedge fund, and we also do this type of financing in Canada as well. And now we're excited to bring Easily, our company, to the UK to offer our capital as a service to UK startups.
Thanks very much, David. James, perhaps we could come to you next. James, could you introduce yourself and your company?
Absolutely. So my name is James Craven. I am a founder of a company called Innovation Grants. Based up in the Wirral and also down on the south coast. Formerly, I was a managing director of P&O Consultants UK for the last decade, part of a pan-European innovation funding company. Been involved in many applications over the last decade, both European funding in Horizon 2020 and also Innovate UK funding. I think I must have submitted over 1,000 applications, and we've raised in that time over £100 million worth of funding for the people we've worked with. A lot of experience, both in actually putting the applications together, but also in helping organisations deliver the R&D and project management report to the funding agencies to make sure they get every single penny or euro cent they can out of the available grant funding on the table.
Okay. Thank you very much. And last but by no means least, the man with the best locks in professional services lockdown, Ben Rule. Ben, perhaps you could tell us, you could introduce yourself and also tell us a bit about your favourite hair products.
Yeah, thank you, Adam. I'm sure lots of people are waiting for the hairdressers to reopen so I can actually get my mop cut. But yeah, so it's good to have everyone on the call. As Adam said, I'm a co-founder at Ignition Financial with Adam, and I very much focus on the R&D tax credits within the firm, so servicing our clients who need that support. We've been doing it for many years now, delivering £1 million worth of tax credits through to our companies. And really what we aim to do is help clients understand whether or not the activities they're doing meets HMRC's definitions of R&D, and then helping them identify what costs they've incurred and making sure we claim the maximum amount possible. We do come at it from a unique perspective with everything we do at Ignition Financial, where we all have backgrounds aren't just in pure accountancy. So when we are looking at what a business is doing, we really do look to try and understand the commercial and tech realities of their activities. And we really feel that actually helps improve the quality of the report and also the level of claim that's being made.
Thank you. And I should probably add that Ben and I have known each other an awful long time, hence I can make lockdown locks jokes. We started the same day at PwC many years ago.
Yeah.
Ben, actually, perhaps we could start with you. Perhaps you could tell us a little bit about what R&D tax credits are, which businesses are eligible, types of expenses that qualify, and things like that. And then we can perhaps go into some. We can talk about grants with James.
Yeah, of course, definitely. So the research and development tax credits is designed to encourage innovation in the UK and increase the level of spending on R&D. Increasing that level of spending is a key initiative of the government to try and make sure we're a hub for innovation. It allows companies to receive a cash benefit or a reduction in their corporation tax bill, which is obviously still a cash benefit, but it does mean that loss-making companies can receive cash, or profit-making companies can receive a reduction in their corporation tax bill. So it's incredibly valuable. If you think about one of the obvious ways many companies fund their businesses, it's through equity financing. Yep. But this is a fantastic way to finance a business without having to give away equity, and it's supporting your R&D activities. So it's a fantastic scheme. The average claim is between 50 and 60K. From my experience, that normally happens with companies maybe in their first 2 years of trading, but generally after that, years 3, 4, claim sizes start accelerating quite a lot. And to give you an idea of how big the scheme is, in 2017-18, it was probably around about £5 million worth of tax credits were paid out by HMRC. So this is a well-run scheme by HMRC that really has benefits for many startup companies.
Okay, thank you, Ben.
I think the other point you were saying about is, Adam, what companies qualify and what do they need to be doing? Really, it's been deliberately designed as a very broad scheme. It doesn't have to be scientists in white lab coats doing R&D. It's much broader than that. It's looking to support any companies that are spending money on resolving a technological or scientific uncertainty. And so from that could be many things. It could be companies developing AI. It could be companies creating new CRM platforms, a customer relationship management, or new software as a service products. And it, of course, will be companies who are trying to cure cancer in their laboratory. So it will cover that whole spectrum.
Okay. And I think worth adding that certainly in my experience of meeting entrepreneurs that from overseas, the UK is one of the leading places, certainly in Europe, from a government support perspective in helping investors. So things like the EIS scheme attracts talented employees through things like the EMI share option schemes, and also giving benefits to entrepreneurs, entrepreneur relief, and also the companies themselves through R&D tax credits. They really, the UK has always been a magnet for innovative businesses, certainly within the Europe, but I would also say perhaps outside the US and China, it's probably one of the leading countries in the world for attracting innovative businesses. David, perhaps you could tell us a little bit about how R&D financing sits alongside what Ben's just outlined.
Yeah, absolutely. So we, first and foremost, we are not R&D specialists. We don't comment on eligibility. We don't do R&D claim work. That's specialist work, which sits with specialists like Ben and his team. What we do is we work with clients to enable them to access their refund, which is owing to them throughout the year or sooner, whenever they like, really. So the way it works is, instead of having to wait to do a full year's worth of expenditure and then complete your claim, file it with HMRC, wait for a payment, get paid, that could be anywhere from a sort of 14 to an 18-month process from first dollar spent to money in the bank. What we say is actually, we can look at this on, say, a quarterly basis, if clients are interested, a monthly basis, and say, what have you spent? So effectively, what's your accrued refund? And we can provide a loan against that accrued refund, typically within 2 or 3 days. And what that does is, not only can it help some clients bridge the gap, so, only a few months out from the financial year end and a few months out from the refund, we can do the bridging type situation just to help clients get there. But also what we do is we try and really supercharge the benefit of the R&D tax credits and effectively, encourage a quarterly borrowing scheme whereby you can take a loan against your expenditure in Q1 and spend it again in Q2. So, it's time value of money. It's bringing that cash forward into your business and enabling you to really drive the cash that you've already got to really to benefit your R&D.
Okay, so I think this is particularly important at the moment because whereas I think pre-COVID-19 companies might have been prepared to wait until their year end to access the cash, as you've just said, the time value of money and having money in the bank, extending the runway. If things are going to take longer to access other forms of finance, might be your customers are taking longer to pay or taking longer to close an investment round. So
absolutely,
those
kinds of... Yeah, no, you're 100% right there. Because we are putting together a real specialty form of finance, it means, but simply looking at it, we stay in our lane, we stay in our box, and we do our thing. We provide a loan against the expected receivable, and that's what we do. It's quite clear for customers. We make it as clear as possible for everybody involved. Other, if the business may or may not have other finance providers. So you're dead right in terms of it can just help extend runway. So, depending on your business, now may or may not be the best time to be raising capital. So, we can push that. We can help you extend that time frame. That kind of looking at it that way is also, what in my experience over the last sort of 4 years of doing this business, is that, pushing your R&D down a little bit further as well can ultimately raise the valuation of the company. So, I mean, if you're 6 months out from something, maybe you want to look at another style of finance to get you to that next point, which then will mean you could raise on an increased valuation and either raise less or retain more equity. So, it's all just about making sure you've had a good look at the options available to you.
I think that's spot on, and that sits pretty squarely with the advice that we've been giving our clients, is look at all the different funding types, short-term and long-term at the moment, and try to think of them as, well, we think of them as levers. Bring in what you can use, the various different schemes. What can you do with your customers and your suppliers, as well as grant funding, the loans that are available, and potentially equity financing. Give yourself options, and try not to get into the position whereby you've only got a couple of months runway left and you're needing to look for external investment. And I think, James, perhaps we could bring you in now just to give us a little bit about the grants which are available at the moment to SMEs, particularly innovative SMEs.
Sure, of course. Well, we're talking today primarily about the grant funding available from Innovate UK, which is the UK government's primary innovation funding body. What's our grant funding? What is grant funding? I should answer first of all. It's complementary to R&D tax credits, but ultimately grant funding are risk finance provided by the government, non-repayable risk finance, which is aimed at really helping companies with highly innovative products, processes, or ideas, get them off the ground. It's not just early stage companies, but we've worked with a lot of companies that have just formed, are struggling to raise the finance they need, perhaps to have the 1 and 2 years runway before you can claim the R&D tax credits. And also maybe raising equity, but haven't got enough equity to deliver the full range of development work they want to do. And of course, when you're giving away equity to raise money, you've given away too much of your business. So using grant funding can really leverage the equity you do get. For example, for small companies in the UK, so anybody under 50 people in the company, you can get up to 70% grant funding for your project. It is competitive, unlike R&D tax credits. If you're doing R&D, you are eligible for it as long as you can prove the work you're doing. With grant funding, you apply upfront before your project rather than arrears of doing the work like you would do in R&D tax credits. The competitive schemes, you submit applications against deadlines, they're independently assessed, and the highest quality proposals get the funding. There are advantages of grants over tax credits. Sorry to step on your feet, guys, but the point is that the funding levels are higher, up to 70%, and the range of costs you can claim against are also wider. So you've got labour costs, subcontracting, materials, capital depreciation and capital expenditure, contribution to IP, travel costs as well, and even overhead allowance of 20% of labour costs. So the amount of grant funding you can get for your work is higher, and also it comes in quarterly tranches. So you spend money for 3 months, then you put a claim in, and assuming you put your claim in correctly, then you get the money back within 1 month. So it gives you a constant throughput of money in your project, into your project. Of course, the great thing about grants is if you do fail with them, then you can still use the R&D tax credits. So applying for a grant doesn't preclude you from the potential to get R&D tax credits. If you're not successful with the grant, there is some relationship between when you can use tax credits and grants, which I'm sure Ben or me will talk about at some point. But really, Innovate UK have about £1 billion a year to put into innovative businesses. They are run through different programs, thematic ones. Thematic means sectoral focused projects. So they'll every now and again, every few months, they'll launch a medtech scheme, for example, or it could be something in lightweighting for automotive industry. But there is one catch-all program that Innovate UK have run throughout their existence called variously Grand, Smart and Open. But this is an open grant where any business with any innovative product, process or idea really has a game-changing potential for their particular sector can apply to it. So you don't have to be a specific, meet one of the specific target sectors that Innovate UK run programs for, there's always going to be grants available for you, assuming you have got a strong team and a really game-changing idea.
Okay. And James,
Sorry,
go for it, Ben.
I was going to say one thing there, which is really good. I mean, mine and James's background is because we happened to, probably about a year and a half ago, maybe, we came into contact with each other because we were both working for the same client.
Yes.
And I think what's really interesting is how this client has managed to make both grants and R&D tax credits work with them. And it is all about people making the right choice for the company at the right time to fund what they're doing. Yes. And we'll mainly focus on the SME R&D tax credit scheme during this conversation. But there is another scheme called REDIC, which is for bigger companies. But you've got a consideration here with grants. If you do decide to go down and apply for a grant because it helps your immediate needs at that point, you can still make an R&D claim. It just falls under the slightly less generous big company scheme, and that's fine. And then also, if you word your grant project correctly, or if you word your R&D project correctly, if you word it tightly enough, then it means that you ring fence that particular project. So let's say you get grant funding for phase 1 and you ring fence it in that terminology, then it means any of your later phases of development can fall into the more generous small company scheme. So that really, they're not in conflict. It's just about what's right at the right time for the company and making sure you word things in the correct way to maximize the benefit of both.
Absolutely.
Okay, so this was one of my key questions. Innovate UK grants and R&D tax credits are not mutually exclusive. You can get both together. Now, is there an optimal way to use and access both schemes? Question for, I guess, James or Ben.
I think, Ben, that's my approach would be if you've got a project, you're planning to deliver, I'd always look at the opportunities for grant funding in the first instance, because if you don't apply, you don't know if you're going to get it, and you also have a higher funding rate for your work, up to 70% rather than the 33% range for R&D tax credit, plus also the cash flow benefit of getting the money on a quarterly basis. So look at your projects. If there's a grant funding program that's available to you and you've got a decent chance of success for it, then it's worth considering looking at the grant funding. If you lose, if you don't get it, then you've still got the R&D tax credits. So as you say, go for the scheme that offers you the best chance of getting the most amount of money for your project.
Okay.
Yeah, I'd agree.
Okay. David, perhaps we could just have a couple more questions on R&D finance, and then I think we'll go to some questions from the audience, if that's okay. David, perhaps you could tell us a little bit about the how much and when and the costs involved, and any key criteria that you have in lending these funds.
Yeah, sure. So I guess, and to build on a bit of what Ben and James were saying as well, it really is about optionality. We provide one option, but there's just so many exciting options out there at the moment that, your time is just so well spent getting out there, seeing what's there, doing a bit of research, and just having quality conversations with quality people, yields great results. But in terms of timing and how we work, really that's up to the client. We, like I said in sort of my intro, I started a business as well. So I have, been through the experience of, capital raising and how that's going and how does it look. So the product is actually built to address some of those needs. So what we do is we make it quite quick, easy and flexible for founders. At the end of the day, you need to be focused on your business and what the core of your business is, and not the finance that makes the good stuff happen. So in terms of timing, what we look for is just a clear period. So if the business says, look, I want to do this over 1 month, great, that's fine. Let's look at an assessment over 1 month. What have you spent? what's your resulting refund, and we'll provide a loan. If the business wants to do it over 6 weeks, 6 months, 9 months, it doesn't matter. We just look at the period and then look at what the accrued refund's going to be. In terms of how we size the loan, like I said before, we're not R&D advisors. We don't make comment on R&D, what's eligible, what is and what isn't.
Yep.
We work with a group of specialist providers to do that. So the loan is actually sized by the company's R&D advisor.
Okay.
So they actually tell us, okay, this was the expenditure, and then we advance against that. In terms of your question on rates, numbers, things like that, we advance at an 80% rate.
Okay.
So what that means is, we calculate what the refund's going to be, and we'll give you 80% of that. We charge an annualized cost of capital of 15%, which is accrued into the outstanding loan balance. So what that means is we provide the cash, and you don't need to actually service that loan. So you don't need to pay interest or anything against it. We just accrue it all.
Yep.
At the very end, the way it works is the funds come in from HMRC. They actually come to us at Easily. We take the principal plus the interest, and then we refund the rest to the client. We usually make sure we size the loan, so there's a little buffer in there, which protects us all involved in the transaction. So even if you do take finance throughout the year, you're still going to see even another cash injection at the end of the year there. One thing I also will say is, we not only we actually encourage it multiple borrowing during the year. So like I said, around the quarterly, in terms of your frequency, if customers want to work with us on a monthly basis, great. We can actually structure it so you're getting a cash injection against your expected receivable monthly, or we can do it 6 monthly, or however we want to work this. Again, it goes back to our real core ethos of what we do here around flexibility.
Okay, thank you. Ben, a question here. Can you tell us a little bit about the qualifying costs? Perhaps you could tell us a little about the qualifying costs and anything else entrepreneurs might need to be aware of.
Yeah, okay. So I think initially I set out that it's about driving an advance in technology or science. And that's very much an advance in the overall knowledge in that particular space you're working in. So that's one of the key criteria. Are you actually driving forward in advance? Then what you'd be looking at is when the project starts and finishes. So it starts not when you're doing the market research to work out if commercially this is something you want to be starting your endeavor on, but more about once you've identified that there's an uncertainty. There's nothing out there which the market which currently does, which allows you to solve the problem you're looking to solve. And then it finishes once your tech guys, your science team have resolved that uncertainty to the point where they're like, yes, okay, we now have a functioning product. It's then important that you're the right size of company. So you've got to have less than 500 employees, and then you have to have less than 100 million turnover or less than 86 million gross assets on your balance sheet. So once you've achieved those criteria, it's then very important to look at what costs you have. The main costs that we see for the majority of our clients will be employee costs. That's a large component. So you're allowed to take the salary of the employees, the employer's national insurance and pension costs. If someone's only been working on R&D for a portion of their time, then you work out the appropriate way to apportion the amount of costs linked to resolving the uncertainty. The second cost that we see coming through, which is significant, would be subcontracted costs, where you've gone to a contractor and said to them, could you please develop this specific bit of the technology or science that we need to develop? And so you can include 65% of the costs linked to the contractor. It's 65% because HMRC are effectively trying to knock out the profit margin that a contractor will be including in their invoicing to you. So that's why you have to take a haircut of 35%. Then the other main costs that you can include would be externally provided workers. So this is effectively where you have got someone working for you as if they are an employee in your team, they're under your management, but you're going through some form of third party to pay them. So, employment agency would be an obvious example. You then have software costs, so any software directly involved in R&D, and then you'd also have any sorts of, let's call it consumables, so heat, light, electricity. Generally, in my experience, that normally is at the very margin of a claim. It's still important to include, but the real benefit comes from your employees and contractors and potentially your externally provided workers as well.
Okay.
Once you've prepared all of that, so you prepare a report which details out what R&D you are doing and what the costs are. That then gets submitted with your tax return. And at the moment, HMRC are processing claims in about 28 days. So if your claim's successful, you will then see cash back in your bank account after 28 days, or you would have just paid less corporation tax at the point that you submitted your tax return.
Okay, so the HMRC are turning them around much quicker than they have been previously at the moment, but clearly not as quickly as getting 80% now, which actually sounds pretty good, David. I hadn't heard as much as 80% before. I'd heard 70% and 50%, I think. So that sounds pretty good. James, question for you. What are the success rates like on applying for Innovate UK grants? And well, maybe you could.
It's a very good question. We regularly submit freedom of information requests to Innovate UK to really just get an understanding of the volume applications, the type of what gets funded.
Yeah.
One of our USPs is that kind of knowledge. The general success rates for the open schemes, like the SMART program I mentioned before, are about 10%, to be honest with you. They're pretty low. The thematic schemes, which are more sector focused, sometimes you have cultural sector ones, sometimes medical ones, they vary. They tend to be higher because there's a more limited pool of applicants to those. So they tend to be between 20 and 30%. 25 is pretty an average one. Of course, you using somebody who knows the system and what to write and what they're looking for, and to pre-qualify your project as well, the benefits. There are success rates have always been typically between 50 to 80%. I say 50 to 80 because you get 2 bites to the cherry with Innovate UK. You get 2 chances to apply to any scheme. So we typically get 50, 60% in the first attempt. You get feedback, very detailed feedback from evaluators on your application, and you can take into account anything they've said, address any questions that they wanted to know, resubmit an application, and we hoover up the balance there. So we get to about 80% success rate. Again, there's also part of that is down to the fact that a lot of people put applications in that maybe don't fit for scope of the call, or really are not suitable for funding. So don't be terrified by the fact that success rates can be low, sometimes down to 5%. But just because it's a 5-10% success rate doesn't mean that would apply to the people perhaps on this call now. There are people putting speculative applications in, they don't fill the forms out correctly. So a lot of people drop off for that reason. So it's about making sure if you're going to put the effort into an application, make sure you've got a good project, a good team, and you're aligned with the scope of the particular call and address all the questions, then put the effort into it. But that's when people like we come along to take that effort off people's hands. We do all the donkey work, as you call it.
I have to admit the percentages, the 10% and the up to 80% using a specialist. I've heard these figures anecdotally, and that's why we do recommend to our clients that if you're looking at Innovate UK grant, is try and involve a specialist to improve, well, not only to improve your chances for success, perhaps potentially 8-fold, but also considering where your time as a founder is most more valuable spent with investors, selling, marketing, product development, whatever it may be.
It's very true. It's not just the fact it's your own time, it's the efficiency as well. So when you know what you're doing, like a specialist would do, it is quicker to write an application. If you're doing it yourself and read the guidelines, it's going to take 2 or 3 times as long perhaps, and that's not the best use of time for the leaders in the business.
Okay, we're going to come to some questions now from the attendees, so please post them into the Q&A box. There were some questions submitted in advance as well, which we will come to, but feel free you can repost them in this Q&A box as well if you'd like them if you'd like us to come to them sooner. Question for David: how do you ensure that the businesses you lend to are sure to get their R&D tax credit approved? That's a good risk management question for your business, David.
Yeah, it certainly is. And I got a short and a long answer to that. So I'll give you both. The short answer is I ask Ben and he tells me. The long answer is we don't work with just any type of R&D advisor. As I said many times, as specialists. So we know the advisors. We know how they work. We know about their track record. So we look to the advisor to help provide us comfort in the claim and the quality of the claim, and making sure that it is going to be received. We also do, on our side, we take a traditional credit approach, and we still do look at the overall credit of the business as well. So that's pretty much it.
Great. Right. So a question for James here, also from Steve. It looks like Innovate UK have pulled the next Smart Grant round that would have opened in August. Are there any alternatives for projects that don't fall under any of the current competition scopes?
Well, it's a constantly changing landscape at the moment. I think we're aware that's across the government board. The decisions change all the time. I know government has put a lot more money into Innovate UK, and they are planning some, they're called COVID-focused programs. There was one that closed a month ago. It was only small grants, like £50,000. But literally, you could apply for pretty much anything, absolutely anything, as long as it had some reference to COVID in it. And also, they're going to be bringing out other schemes that, again, are addressing the issues that COVID has caused to society and businesses in the UK. So although you may not think I'm not developing a vaccine, but if you're developing a technology that enables people to stay connected better, to work from home better, for example, to for shops to be able to market online more effectively, so anything that deals with the problems that the economic and social problems that have come out of COVID, then you could well apply for these schemes. They are constantly being developed. It's a new angle for Innovate UK, but we do know that they are having a new program launched within the next month. And the next round of Smart will be, as you say, it's not going to be August, it's going to be later in the year, around October. But it's watch this space. Innovate UK's website is good, full of information. They've got very good newsletter and outreach as well, so they will be communicating any opportunities. And also, if you're interested in grants, talk to us. We always flag to anybody that we know a scheme's relevant to. As soon as we're aware of a forthcoming scheme, even before it's launched potentially, we'll get in touch with people and say, hey, are you aware of this? Is this of interest? And just keep people aware of what funding is available for them.
Perfect. Ben, if we can, there's a couple of questions on R&D activity in overseas countries from Andy and Andrew. So I'll read them both out because I think they're similar. You can probably cover them both off. First one from Andrew is, we carry a lot of R&D work through one of our subsidiary companies based in Poland, which is funded by our UK entity, presumably a UK holding company or top company. Is there an effective way to receive UK R&D tax credits for the R&D work carried out by our Finnish subsidiary? That's from Andy. And then the other overseas question is, can a UK company claim R&D credits for work, etc., done in a foreign country? So India, Serbia, EU, I think were the examples given by Andy.
So, the simple answer is yes. R&D work carried out abroad can be claimed in the UK. I think the key criteria is that the costs have to be sitting in the UK company making a UK corporation tax return. So therefore, the costs need to be recharged through to the UK company. And the structure needs to be in such a way that it's not artificial. So if you do have a group structure where you have a UK company and then you have some of the R&D activity happening in a foreign country, that's fine if there's legitimate business reasons for it. And what you have is you have the UK parent commissioning the R&D. They're perhaps the ones who are going to go and monetize the end product that's going to be created. But for various reasons, you have your dev team in Poland. All you'd need to make sure is that you have clear agreements in place as to what costs are going to be recharged across to the UK company. And there's a slightly different way. It's a slight technicality of how you look at those costs that are recharged. But I think for the purpose of this, the simple question is yes, if there's a legitimate reason for recharging, and the UK company can make an R&D claim.
Thanks, Ben. So Will has come in with a question of, does a small company need to use professional support to apply for grants and R&D tax credits? And how much more successful are applications using professional support? So I think we've covered both those questions from a grant and R&D tax credit perspective, in that you can apply direct or on your own if you do. However, your chances of success, there's a factor of 8-fold potentially in Innovate UK grants. And I'm not sure, Ben, do you have any statistics to hand?
So I don't have statistics as to what the success rate is for people who apply for themselves, because that isn't necessarily published. I think there's just two things to bear in mind. HMRC do see this area as an area where incorrect claims are being made. And so that's why they are trying to tighten up and limiting what people can claim in future years to 3 times what your PAYE bill is going to be. So they are aware of that. So they are placing more interest in reviewing claims. I think the one that Adam, you and me have seen is it's also other stakeholders are interested in this claim. So if you are going to be taking external investment, especially more senior rounds where they're going to be doing tax due diligence, R&D claims are seen as a risk area because of the element of judgment involved. And so this isn't an attempt to scare anyone to go and use a specialist advisor. I think what it is about just making sure that you have the right competencies and skills and know the legislation to be able to make a valid claim. That's the most important thing.
That's a good point.
That's what David looks for when he's doing his loans. It's about making sure that the people who are assessing what the claim is have the experience.
That's a good point, Ben. There was a client that we were helping to exit. They were new to us, but when they were exiting, the acquirer spotted in due diligence that R&D tax credit was a little imaginative, shall we say, and it got taken off their purchase price. And they ended up writing to HMRC and giving the money back. David, I think Will's question though is more relevant to you.
Yes.
Do you need to have a third-party advisor?
Yes. It's very, very, very straight answer there. We will not work with self-filers. We need to make sure that there is a specialist involved. It really goes to the first question I was asked about, comfort and sizing around the loan. And the way we do that is by only working with, select and reputable partners. So, if you to access the early financing, absolutely, we need to see a third-party provider there completing the review work.
Okay, thank you. A question from Robin Zaragoza. Apologies for one of them being incorrect, if possible. Ben, I think this is for you. What kind of work projects will qualify as R&D? And I think this is a specific question because Robin's business does a lot of discovery work for services to understand what potential customer needs. His initial view is this doesn't qualify, but he'd like to confirm if you're able to answer that succinctly. That'd be great.
So I don't want to be the bearer of bad news, but I probably agree with Robin there that the discovery work where you're trying to identify customer needs or gaps in the market, that wouldn't qualify in its own right, because that's before you've identified what the technological or scientific uncertainty is. What you'd have is you'd do those discovery phases, you'd be looking for gaps or for demand. And then you'd be saying, well, how can we fulfill that gap or demand? Do we know if there's technology out there or a scientific solution? And at the point where you say no, and then people start scratching their heads as to, well, how are we going to solve it then? That's the point where it starts. Doesn't matter if it ends up being successful, it might fail. And HMRC isn't looking to only reward successful businesses, but they are looking to make sure they only start rewarding it once the uncertainty is being identified and work is being done on that.
Thanks, Ben. So if we come to question from Mr. Thorne, is there any impact on claiming R&D tax credits if the company has claimed government grants RE coronavirus?
So I'll quickly pick this one up. There are limits as to the amount of state aid that you are allowed to receive, and various of the government schemes are classed as state aid. And I can always have a separate conversation with people specifically about those limits, because they can be a little bit complex. On the whole, the limits are quite generous, so it doesn't affect too many companies. My initial view is that many of the COVID-related support the government is providing isn't specific to the R&D work that's being carried out, and therefore, because it's not specific, it shouldn't have an impact on the R&D claim.
Okay. Look, thank you for all the questions. We're getting quite a lot in. I'd just like to reassure you that if we don't answer your questions today, Ben, David, and James are very, very happy to arrange a discussion or a one-on-one Zoom or call with you to discuss your specific cases, and if they can't answer it over the phone, support you further up as well. And we'll provide contact details in our usual follow-up email following this. So James, how would you price for your support if on for an Innovate UK grant? And that comes from Steve, that question.
Yeah, we're trying to be quite flexible the way we work, depends on the needs of a particular client and their capabilities. But our typical model is very much a risk-shared approach. So we make our money out of success. We do charge an upfront commitment fee. This is, doesn't cover the amount of effort that goes in. Varies depending on the size of the grant, the amount of work he's doing, and whether it's a collaborative project as well. But in the region of £1,000 to £2,500.
Okay.
Where we make our money is on success. So we charge a percentage success rate on the amount of grant that is offered to a client. And again, that percentage, it does vary, depends on the size of the grant we're applying for. We typically look in the range of 10 to 15%. The average is about 12% of the grant that's offered. But like I say, we're highly motivated to get that win, because otherwise we're losing money until we get those funds in for our clients.
Yes, those goal alignment fees tend to be pretty popular with our clients. I know that because I know there's a similar fee structure in place for R&D tax credit support as well. Stefan has asked a more general question of what needs to be set up and when, but I suppose we can follow up with a memo. But if you're an entrepreneur, what would you suggest would be initial steps for evaluating whether R&D tax credits or Innovate UK grants might be applicable to their business? James, perhaps you go.
I think the first thing to do with respect to grants is just, obviously you can talk to somebody like myself who will, after a half hour conversation, I'll know pretty much whether you've got a fundable business and a fundable project. You don't have to spend that. We don't charge for these initial conversations, but we qualify projects. So that's probably the easiest way of doing it, is talk to an expert like us. So we know what we're doing. We know what's been funded in the past. We know what the funding agencies are looking to fund for as well. And so happily talk to us about it. The alternative, of course, is just looking at the websites. The Innovate UK do explain what they're looking for, but to be fair, the interpretation of what they mean by a clear game-changing idea and what qualifies as that, is hard to understand unless you've been involved in projects over the years. So read the website, the information's on there, but really to get a really qualified understanding of whether your project and your business is suitable for funding, either now or potentially in future, just talk to somebody like myself.
Okay, and through our newsletter, I'm a Founder, which I know a number of you already signed up to, we'll be sharing details of competitions as they're announced as well, and we'll have details of how you can get support from James as well.
Good.
Okay. Question from Milesh. I think this might be one for Ben. Apologies, David. I was hoping for one for you. For full-time employees, how do you work out the proportion of their salary which can be assigned to R&D eligible activities?
Yeah, just share us off mute. So the gold standard would be timesheets. That's what HMRC would, I believe, like all clients to companies to have. And I would strongly advise most, any companies to try and put in some sort of timesheet type tool, especially once they've made their first claim. Quite often, clients don't have that in place for the first claim because they just weren't really where they needed it. But then after that, if you've got a mixture of people doing R&D and non-R&D work, then having something like a timesheet is the easiest way. There's quite a few cheap tools out there. In lieu of that, you then have to start using estimation techniques. So you could start looking at, well, at what point in the year did a project start and when did you complete it? And how many man days did that cover? And then you use that as an apportionment tool. It's anything which, when HMRC come along and say to you, how did you know it was 63% of that person's time was linked to R&D, that you just have something in the background where you say, well, this was my management view on how to estimate it. And companies like ours or anyone who does this is able to provide that support in finding the right ways for estimation.
I probably should have brought this up earlier, but the poll results, if we have them, Stu, it'd be interesting to see. Okay, so actually reasonable split between people who have applied for R&D tax credits before and those who haven't. And grant applications are quite sought after at the moment too. So if we could, I think what we'll do is we'll take, perhaps we could finish with one question for all of you in terms of top tips. So what would your top tips be for entrepreneurs who are perhaps considering a grant or looking at getting R&D tax credit financing in early, and also, Ben, more generally thinking about an R&D tax credit? James, if we perhaps go James, David, and Ben, and then we'll look to wrap up, I think.
So top tips is actually respectful. I mean, just keep your eyes open for grant funding. Talk to somebody who's involved in grant funding so that they can know your business, know what you're planning to do in terms of your project, and then can flag to you when funding is available, whether it's available now or in future. So make that contact, have somebody, an expert, to let you know whether you are viable for grant funding, and to let you know when funding's out there. And obviously I'm going to say this, but using experts. They are complicated things. It's a time-consuming process for somebody who's not done it before, and you want to maximise your chance of success. So just talk to the experts, I'd say. Okay,
thanks very much, James. David?
Yeah, look, I'll sort of give two tips here. One for the founders in the room, which is just to speak to people. Honestly, people are genuinely interested in what you're doing and usually happy to give their time. So I always encourage people to reach out to myself if you want to just have a conversation. That's fine, whether it's to do with business or not. There's a lot of people out there that have been through a lot of journeys, and that's where you find you pull the most value to really, not only keep going, but really drive success. I think from the R&D lending perspective, the biggest top tip there I'd give would be know your lender. So understand who you're working with, who's that person, what's their track record, how many times have they done this, how much money have they lent, do they have the money to lend you, and really do some as much as the lender, and this is not just R&D finance, by the way, this is any sort of type of finance, do DD on the lender as well. Work out who you're really working with, because you have to be comfortable with them as well.
Thanks, David. And Ben?
Yeah, so it goes without saying. First of all, understand the qualifying criteria, which are all the things we spoke about. The other 2 points which I'd raise are, if you're a director and you're doing R&D and you're not on payroll, then all that time and effort you're putting in, you're not actually going to be able to put that effort into the R&D claim. So I think there is consideration for directors or founders who aren't on payroll. Should I perhaps be on payroll if there is funding to pay the payroll to allow those costs to be included in an R&D claim? So often founders can be heavily involved in R&D and there is no reward for their efforts coming back from it. And the other one is, you get to month 3, 4, 5 after your year end and you're working with an R&D specialist and they're trying to get you to think back 16 months to when you started your 16 months ago to when you started a project, and they start asking you then, well, what was the uncertainty you faced at that time? It can be quite hard to really recall what the uncertainty was, especially if you've resolved the issue by the point you're writing the report. So maybe start trying to get your tech guys to be developing, the answers to some of these R&D questions as they go, even if it's just, notes in Microsoft Note, just to keep it fresh, so that when they come back, they know what they need to write.
Okay. Well, I think we'll call it time there. James, David, and Ben, thank you very, very much for your time and your insights and your advice. We will follow up with details of how to get in touch with you. Should any of the attendees have any questions, and of course we'll put the webinar up on our usual YouTube channel. For everyone else, thank you very much for your time and for listening, and have a lovely weekend when it arrives. Thanks very much.
Thanks so much, everybody.
Cheers.
Thank you all.
Thank you. Bye-bye.
Bye-bye.